Good morning, good afternoon, good evening, traders. Wherever you are in the world, I hope you're doing well. I hope you're safe. I hope you're healthy. I hope you've got a big smile on your face. And I hope you're catching pips as usual. Pips of Persia here. In today's video, we will have a look at seasonalities and the charts many of you have seen circling around and used heavily by traders to really try and get to the bottom of it and see if it's really something worth focusing on. But before we get into the video, I must say, I really don't want to hurt anyone's feelings, so this video is only my view on seasonalities, and by no means you should just duplicate what I think, but more on that slightly later. Now first, what is the meaning of seasonality and how did it come about? It is generally the belief that during a set period of time every year, especially because of certain fundamental events that take place that repeat themselves every year, a currency is likely to behave similar, creating a quote-unquote consistent pattern that allows traders to define the direction of that asset much easier. What we forget about, however, is that every year is different to the next and different to the previous, and there is literally zero guarantee that these patterns will actually repeat themselves. So you must have seen a lot of these charts all around social media or in a lot of different trading videos being used, especially these ones that talk about the seasonality of a given currency, saying that during this month is going to go up and during the next month is going to come down. And how a lot of traders end up using these charts is they think to themselves, hey, during this month, this currency, it's meant to go up because this picture is saying so. Maybe I should, during that month, only look at buy positions for that currency, or vice versa for another currency that's going down during a specific month. And they think to themselves, during that given time period, I should only be looking at shorts. That's a little bit of a problematic thought process because without even looking at technicals, without even looking at anything else, people have already decided on the direction that they are planning to trade. Do you see where the problem lies now? I'm not trying to say seasonalities are bad. That didn't come out of my mouth. I'm just saying overanalyzing them and applying them too much to our charts is definitely a questionable thing to do. Now, for us to be able to backtest such data easier, it makes sense to focus on what we call the weighted index of a currency and see if there really is any consistency with the described behaviors. For those of you who are unfamiliar with the weighted indexes or the weighted indices, here is a quick breakdown of what they mean. Have a look at the currency pair I was about to say, but the currencies that I have written at the top over there. This basically is the weighted index of US dollar. I'm going to forget about US dollar right now. It's the same for every currency, but we'll focus on pound or let's say euro to start off with. And you can't really go on TradingView and just search for euro weighted index. It's not going to come up instantly. You actually physically have to type in these values and then press enter. So let's quickly break down exactly what it is. There is 8 currencies or 8 major currencies that we trade. Euro, Australian dollar, Canadian dollar, Swiss franc, US dollar, New Zealand dollar, pound, and Japanese yen. 7 out of 8 of these currencies, the unit is a singular digit. So it's always 1 euro, 1 Australian dollar, 1 Canadian dollar, 1 Swiss franc, 1 US dollar, 1 New Zealand dollar, 1 pound. But when it comes to Japanese yen, the base unit is around 100, not 1. That's why when you look at Euro JPY, Pound JPY, USD JPY, you can see that the values is around 100, not 1, not a singular digit, but a 3-figure digit. And what we've done is very simple. We've just taken an average of that given currency across the whole board. If you remember in mathematics, if you had 7 numbers and you want to take an average of them, what would you do? You would add all of those 7 numbers together and divide it by 7. It's very simple. What we are doing is applying the same thought process to currencies. So there's 8 currencies, which means when you choose a base currency like euro, there's going to be 7 currency pairs that currency will give you, because you can't have euro, can you? So for every one currency, you have 7 main currency pairs that you will be able to trade. And all we've done is we've made sure to put euro at the beginning of every single one of them. And perhaps euro is not actually the best example because euro comes first anyway. I'm just going to quickly switch to pound just so you can see it's the same behavior. So we make sure to put that currency as the first currency that we are trading, so it's normally Euro GBP that we trade, right? Not GBP Euro, but we make sure to switch it around to have that one currency that we want the weighted index for as the first one. You type in all of the currency pairs. You can see I'm adding them up together. I have brackets around it, and at the end of it, I'm dividing it by 7. So I'm taking an average of all of these currency pairs, with the pound being the dominant currency across the whole board. And if you've already paid attention, you can see that there is a divided by 100 next to GBP JPY, and that's what we were talking about earlier, where there is only Japanese yen that has a 3-figure value for its currency across the 8 major ones. So obviously we can't just leave it as it is. We divide pound, yen, or whatever, the yen factor of it, we divide it by 100. So all of these end up being a 1-digit value. You add them up together, divided by 7. The chart that it's giving you for that given currency, whether it be euro, whether it be pound, whether it be US dollar, whether it be Japanese yen, whether it be Australian dollar, whatever, the chart that it gives you for that given asset is the value of that first currency across the board, and the data points are just being plotted in for you. So the same way you use DXY to analyze US dollar, sometimes you can even use the USD weighted index to do so. The same way you use other indices to analyze a given currency pair, sometimes you can use these type of indices to analyze it. Not that I do. I don't actually use this every day in my trading. I literally rarely ever look at weighted indices, but it's an interesting thing to sometimes have a look at and see what's actually going on for that one given currency across the whole board. And by the way, I don't think TradingView will actually let you go below the daily time frame, as far as I remember, or the 4-hour time frame if you have the free version. So you kind of might need the more advanced versions of the packs if you want to have a look at this on lower time frames. But we're not even going to be focusing on lower time frame analysis on these things. We're just going to focus on the monthly. And as I said, this is not something that I use every single day for my trading, so you might not even necessarily want to focus on it really. If this breakdown of weighted indices didn't make sense, just let me know in the comments. Maybe I can record another video on this in much more detail at another time. Even though, to be fair, I think the very first video on my channel is about this, exactly this. So you might want to check that out in your own time. Even though it was posted much before I got into trading, institutional concepts, quote unquote. But now that we have the base knowledge on both sides, let's put it into practice. We will have a look at 4 seasonality charts, the euro, the pound, US dollar, and Japanese yen, and compare them a little bit with the weighted indices to see how do they actually match with it. Before we start the comparison, I should mention that firstly, the data we are getting on the seasonality charts are relatively old. So that within itself may invalidate any comparison that we draw. But at the end of the day, this is exactly what many traders do day by day. And to be honest, what even is the purpose of seasonality charts if they're going to look different every year, right? And secondly, we will only look at a limited time data on months that have the most obvious behavior to backtest. Otherwise, this video would just get extremely long. Also, I have to give credit to equityclock.com, as this is the website that we are going to get the seasonality charts from. So thanks. Let's jump into it, starting with euro. I'm not going to focus on the months that you can see obvious consolidations or the months that it has gone down first and gone up. No, we just want to focus on months that's easy to backtest, such as in this case January, where you can see throughout the whole January is meant to be bearish. And let's say, for example, August, throughout the whole August is meant to be bearish, and December, the whole December is meant to be bullish. So let's first start with the bearish side of things. January is meant to be bearish, and August is meant to be bearish as well. And this is the euro seasonality chart that we are looking at. So let's go here, and let's not do every single year from the beginning of time. Let's focus on maybe 2015 onwards, for example. I think that makes sense. So again, just to remind you, we're looking at bearish January and a bearish August. So let's start with 2015. January, a bearish January. Yes, indeed, we had a bearish January in 2015. Let's look at August. Did we have a bearish August in 2015? I would argue and say no, that doesn't look too bearish to me. I don't know about you. Now let's go to 2016. January, bearish, I don't know. August 2016, consolidation, let's say. 2017, bearish January for 2017. Yes, you can argue and say that's bearish. August 2017, bearish for euro? No. 2018, January, bearish, not really. August, bearish. Maybe we started off as being extremely bearish and then in the last day it went up. I don't know, but you know, we can argue and say that was more of a consolidating month perhaps. 2019, January, did we have a bearish month? Yes, we did, right over there. And then we go to August 2019, bearish. I don't know. Again, maybe it rallied at the very beginning of the month and then came crashing back down for the rest of that month. But, you know, we can argue against it really. 2020, January, did we have a bearish month for Euro? No. August, did we have a bearish month for Euro? Not really. 21, January, bearish month for Euro. If I want to be extremely generous, we can say yes, that was a bearish month. And we can have a look at August as well. Again, if I'm being super generous, we can say it was a bearish month for Euro in August as well, in August 21. And finally, January 22, bearish for Euro. I would argue and say that's not bearish. So even in these two examples that we've seen, there hasn't been that much consistency. But now let's check for a bullish Euro throughout December in all of these years. So let's go back to 2015 again. We're looking at a bullish Euro for December for Euro. So bullish in 2015 December. Yes, we had a bullish month for 2015. 2016, you can argue and say, yeah, kind of bullish, I suppose. Then we go to 2017, bullish for Euro. Not really. 2018, bullish for Euro. There we go. 2019, bullish for Euro. I don't know. 2020, bullish for Euro. Again, if I'm being generous, we can say maybe it was bullish the whole month and in the last day it just collapsed back down. But we can kind of label that as consolidation, I suppose. 21, bullish for Euro. I don't know. 2022, we'll find out in a few months. So that was Euro. Again, I'm not going to draw any conclusions right now. I'll let you think about it and I'll tell you a little bit later why I'm going to let you think about this yourself. But let's move on to British pound now. So let's go and have a look at this picture. Again, for British pound, in terms of the months that we can focus on, we can kind of say, let's say bullish April. That seems to be like the month that kind of came down in the beginning, but generally went up during April. Definitely bullish during July, right? So bullish April, bullish July, and bearish August. But let's start with the bullish side of things first. Technically from March to end of July, we are meant to be getting a bullish rally. But I'm going to be fair, we're not going to look at it like that. We look at the ones that says that, okay, yeah, generally on the majority of that month, we're getting a bullish rally. July is one of them, opening here, closing there. So generally a bullish rally. And April seems to be the other one in terms of a bullish rally. And you know what, we can... I was going to count December as well, but because it came back down after that, you know, it might be a bit tough to actually look at it as well. So let's just start off with April and July. I hope that's kind of fair. And I hope you're watching this thinking, yeah, do you know what, that's fair enough. That's a good way to look at it. So April and July, bullish for British pound. Let's just go to the weighted index for British pound. That's the weighted index for it. April 2015, bullish, kind of. You can argue and say that was kind of bullish. July, definitely bullish indeed. 2016, April, kind of consolidating, I suppose. Then you have July, not really. In fact, it was bearish. 2017, April, we had bullish month for pound. And then July, we didn't have a bullish month for July. 2018, April, perhaps a consolidating month over there. 2018, July, again, not really a bullish month for British pound then. 2019, April, kind of bullish. Again, I say kind of because you kind of also have to look at it on the scale of what's taken place before. But let's consider that bullish. Then you have July, which is most definitely not bullish. April 2020, I can't really call that bullish. I don't know about you. Then July, definitely a bullish month. 21, April, definitely not a bullish month. July, kind of a bullish month. Yeah, not even kind of. Yeah, we'll consider that a bullish month. And finally, 22, April, which is right here. Obviously, July hasn't happened yet, but April, you can kind of consider that also a bullish month, but more so a consolidating month. Again, if we're being generous, it must have rallied throughout the entire month and then came back down just as the end of it, but I don't think that was the case here. So compared with Euro, pound was a little bit more accurate, I suppose, in terms of the 2 months that we were looking at in the, the bullishness of April and July. Now, the bearish side, is it fair to look at August? I'm just trying to think what's the most fair to have a look at, like in terms of the biggest drops that we are seeing. So obviously we have end of February till beginning of March, but that's going to be a bit tough to look at on the hourly chart, on the monthly chart. So let's have a look at bearish August, because towards the end of it, it's just meant to consolidate, but generally we're seeing a drop throughout August, and a bearish November, I suppose. Yeah. Well, actually, I think that's the best one, actually. So bearish August and bearish November. Let's just have a look at these two very quickly as well. We'll go from here back just to make it easier. So 2021, November. Did we have bearish? Yes. August? Yes. Also bearish as well. 20. November. Bearish? No. August. Bearish? No. Bearish in November 19. I don't know about that. August. Bearish? I don't know about that. Then we'll go to 18. November. Bearish? Yes, indeed. August? We'll say yes. Yes, indeed. Then we'll go back to November 2017. Bearish? No. August 2017. Bearish? Kind of yes. November 16, bearish, nope. August 16, bearish, again, if we're being generous, yes. And finally, November 15, bearish, kind of, but like this is consolidation majorly, but let's say bearish, yes. And then we have August as a bearish month. Again, we can consider that a bearish month for August as well. So this was like the British pound seasonality charts, and you saw how many times we said yes, how many times we said no. Again, I'm not going to draw any conclusions right now. As I said, we're just looking at this, and then we'll go to US dollar, and we'll draw some conclusions at the end. But I just want to, invite everyone to draw their own conclusions, most importantly. So let's go and have a look at the US dollar weighted index. Now, so we're going to ignore the consolidating months, but I think it's fair to say in April, we are meant to have a very bearish month for US dollar. And in July, we are also meant to have a bearish month, but I'm not going to take into account July just because we get this rally at the start and then it's coming back down. So we just focus on April as a bearish month and December as a bearish month. I think that's fair to do so, right? So April and December, bearish for US dollar. April and December, bearish for US dollar. April, bearish. Nope. December 21. Bearish, kind of yes. April, bearish, kind of yes. Well, not but I said kind of, I shouldn't have said kind of, definitely yes. December 20, bearish, yes. April, bearish, yes. December 19, bearish, yes. April 19, bearish, no. December 18, bearish, no. April 19, 18, April 18, bearish, also no. December 17, bearish, yes. April, bearish, no. 16, bearish, no in December. And then April, bearish, yes. December 15, bearish, kind of yes. And then April 15, bearish, also yes. So in this case, even the US dollar in the bearish times has been more accurate than not. Now let's have a look at the bullish side of the US dollar as well. We can argue and say August is meant to be a bullish month for US dollar. I think that's fair to say. And I guess November, the best way to look at it would be like mid-October to mid-November. But August, definitely a bullish month for US dollar. Okay, we'll just focus on August for bullish US dollar. How about that? Just to make it easier as well. August, bullish, yes, ish. August 2020, bullish, no. August 2019, bullish, yes. August 2018, bullish, yes. August 2017, bullish, kind of yes. August 2016, bullish, kind of yes. August 2015, bullish, also yes. There we go. Okay, that's US dollar done as well. You saw how many of them were matching and how many weren't. Obviously, a good few of the ones in US dollar has been matching as well. And now finally, let's have a look at Japanese yen seasonality. This might be the most challenging one, I suppose, because the best way we can look at it, I suppose, is say April and May is bullish, and August, September, and October is also bullish. So April and May, as 2 months next together, are bullish, and August, September, October, these 3 months next together should be bullish as well. Just to make it easier, I'm just going to put some cyclic lines, if that's what they're called, on. Just so we can spot the Aprils a little bit easier. All of these red lines should now be Aprils, and we can also spot the Augusts slightly easier as well. I'll just change this to blue so we can see it easier. So basically the red line is representing April, so red line and the one after it is meant to be bullish, and the blue line and the 2 candles after it is meant to be bullish. We'll forget 22 because we haven't finished this month completely yet, so I'll leave that be. But we'll go back to August here. So August 21, These 3 months, are they bullish? Definitely not. April, have we had a bullish month in April and May? No and no. August, bullish? No. September, October, we have actually. April, bearish. May, bearish. August, we have had a bullish run here, but September and October it went down. Remember, this is what it looks like throughout September and throughout October as well. And then we'll have a look at April. Yes, bullish April and bullish May in 2019. Then we have August 2018, bullish, then September bearish, then the next month bullish. Generally speaking, these 3 months together just consolidated. It didn't rally. And then you have April and May, which April was bearish and then May was bullish. Again, consolidating behavior. August, September, October, again, we can argue and say it was consolidation. And then the April over here, we did have a bullish run, but it came all the way back down, and May also brought it back down as well. Again, here, August, September, October, again, consolidating. April, definitely a bullish run over here. May, kind of bearish or consolidating. August and September, definitely bullish over here. October kind of went down. We'll give it this one. April and May in 2015, however, that wasn't the case. We had bearish months. So the consistency of this chart was significantly less than the other ones. You saw Euro wasn't the best as well. Perhaps we can put British Pound as the second best one and US dollar as the most accurate one. And to be fair, I think US dollar, this one, yeah, 20-year range ending 21. So this is more recent one as well. So the other ones were, I believe, from a decade ago or something like that. But at the end of the day, these are the exact charts that a lot of people use. Now, you may be thinking, hang on, a good few of these examples you showed actually match the charts. What are you talking about? This is where I need to speak about the development of our analytical and critical mind or critical thinking, which, by the way, is a fundamental skill needed for success in this industry, versus just patterns and how these things will hinder the growth of our critical thinking. Now, anyone with a little bit of understanding of statistics would agree with me when I say the consistency that we would like to see in those charts weren't as great as expected on the actual charts, apart from maybe the US dollar. But generally speaking, this is the issue with pattern trading. This is yet another way, another hidden way that people are trading patterns. You are seeing a picture, you are seeing a specific behavior take place, and all of a sudden you want to apply that to the charts and trade that way with it instantly. Anyone can have a look at these charts and put it next to their own charts and say, hey, this month is meant to be bullish, and hey, this month is meant to be bearish, therefore I'm going to be trading those directions. But you have to start asking yourself the question, why should the market be the same year after year? Why should these patterns or these months be the same year after year? A lot of them were not. As much as some of them were, a lot of them were not. And we still haven't even looked at the other 4 currencies. Is this genuinely something that will help your trading, or yet again, another useless piece of information designed to confuse you more and distract you? I'm not going to answer that question for you, the same way I haven't said anything good or bad about seasonality charts. But I encourage you to genuinely start questioning things for yourself. The issue starts where traders define their direction before doing any analysis just by looking at the seasonality charts. They see a bullish month or they see a bearish month, and instantly for that entire time period on their own charts, they are going to be looking for that direction. Whereas, for example, if you're scalpers or intraday traders, how is that actually going to help you? It's going to be irrelevant for you. Even if you're swing traders, to an extent, it can be irrelevant for you. But by this mentality of thinking to yourself, okay, yes, this chart says it's definitely going to be bullish that month, therefore I should be looking at buys, you're putting yourself at a huge disadvantage because you've decided on your direction before doing any technical analysis. So with critical thinking, to develop that analytical mind, question everything. Question this video. Question anything you learn on YouTube. But learn it for yourself. Go and try and figure it out for yourself. Don't take anything as factual. Do your own research. You are your best teacher. So question anything and everything. Question those charts. Question the consistency of them. Question whether or not you should use them. But do your own research. Go and learn for yourself whether or not you think you should use them. Do not draw conclusions too early. Just because you've seen me mention a few months of these pictures, don't draw conclusions and think to yourself, oh, I should definitely use it for that currency, or maybe I shouldn't use it for this currency, but maybe I should do this, maybe I should do that. No, stop drawing conclusions too early, and do not aim to apply the smallest thing to the entire financial market. Just because it's worked for maybe 1 or 2 scenarios Do not aim to apply that to the whole financial market. There is not a single thing that will absolutely change your trading game. It's not one piece of information that you're missing. It's not just one little tiny hint that's going to absolutely change your game. There is not a single thing, as you might be thinking for yourself, that will absolutely change your trading game. Be that thing yourself. With the way you will approach certain information and with the way you will backtest it and learn it for yourself, you will be the factor that will change your trading game forever. And honestly, if you're serious about developing an analytical skill, start here. I encourage you to go and find and backtest the other 4 seasonality charts and the other 4 currencies that we haven't spoken about and figure things out for yourself. A small homework, if you like. So to start to conclude a little bit, and for me to now give my own, slightly biased opinion, I should say, on seasonality charts, I never use them. I don't think they're useful as such for trading, especially foreign exchange. I don't think it takes into account the different world events that take place every year. For example, during the pandemic, things had been different at the end of the day. So there is no reason why these seasonality charts should be applicable year after year. And guaranteed, if you update them every year and add the next year to it and then take the average of it, yes, obviously you'll apply for all the previous years. But chances are it still wouldn't be as consistent as we would like it to see for the years to come. And at the end of the day, that's the important part because we are trying to trade the future, not the past. So I don't use them. A lot of the phenomenal traders around me do not look at them and do not use them, but I do also know some good traders that pay attention to seasonalities. It depends on how you look at it yourself. It depends on how you apply it to your own trading for yourself. But again, you shouldn't just copy what I tell you. Go and do your own research. Go and figure it out for yourself. Go and look at the other 4 currencies. Go and have a look at the weighted indices and see what you will figure out. And I will end it off with this. If it was that obvious and that easy and straightforward, everybody would have realized it and would have made millions from it already. And by it, I'm not just referring to the seasonality charts. But with that being said, I would appreciate and welcome you pressing the like and subscribe button down below if you gained some value from this video. Let's elevate and let's catch some pips.